Hello everybody and welcome back. Well, it's not often that you reach a point in history that's almost been unmatched throughout markets across the world, and we did so on Friday. We almost entered a technical bear market on the SP 500. We went more than 20% down and then rallied into the end of the day, and this is because of options expiration. The 390 we talked about, that's where they wanted to finish it because they love giving everybody max pain. Let's also talk about the Bollinger because we're way outside of that one now. And on top of that, we've just seen something in history that's almost unmatched and unparalleled. 7 weeks down in a row. Incredibly rare. So much to discuss for the week ahead. Stay tuned. Well, welcome back everybody to the channel, and I think the best place for us to start is to talk about a statistic that's so rare, and that is 7 straight weeks of bearish market movement. Then on top of that, we have actually evaded the bear market in terms of technically closing underneath 20% top to bottom on their SPY S&P 500. Let's talk about what that means. Well, it puts us in a territory that's been reached only a few times, but there were things that happened after that which caused rallies that were actually quite interesting. So it happened in the 50s, the 70s, the 80s, and 2001. Then the 1 month preceding after that, we actually saw a rally, which will be consistent with something else we look at in today's video, along with all of our analysis. But then 3 months happened, and then 6 months happened, and obviously we did see some dips and some declines in some of those markets. Well, as we know, each market is different, but some things can be gleaned from that. And this is a seasonal chart of a midterm election year. Of course, it's the election year we're in the US. And you'll notice that there are some turns that often happen around that mid to late May, which can have some rallies, but that it may not be over yet. Notice there are usually, in midterm election years, weaknesses that occur in the last quarter of the year. Well, if we do go into a rally, it could be one of those sell the rip kind of events. And it does seem like rallies are on the table here with the maximum pain being reached through that Friday session. We'll really see that when we look at the small charts and the options expiration for that event. And I think that'll be an interesting one for a lot of people today. Let's talk about fear and greed and sentiment currently from the retail traders. Well, obviously every indicator in the sun is saying extreme fear. We're sitting on 11 for the fear and greed indicator. A lot of people look at this as a bit of a sign that there could be opportunity in the current markets. And I think that's very valid right now. We're also getting a lot of sentiment reports in, and bearish is still taking over. That is, most people are still bearish or neutral on markets, and the bullish camp has shrunk a lot from the historical averages of 38% plus. I've got some other little charts here that I thought you might find interesting. Here's a chart that was taken literally on the Friday session and from Bloomberg, and it says here, have markets hit rock bottom yet? Now there's 2.5K votes here, and you'll notice that people were freaking out. No stocks are going to keep sinking lower. Then we had another poll taken only a few weeks before that, or only 10 days before that, and they said, is the US heading for a recession? Most people said yes, with 60%. So a lot of people think the US is in a recession. A lot of people think that the markets have not hit rock bottom and sentiment is quite weak. With that, coupled with one of the fastest bear markets in history that's ever been recorded, are we due for a bear market rally? That is, the market's actually rallying back up to certain points. I think it's starting to point to that, and there are many reasons why that we'll discuss today. Let's also talk about the Friday session. If you looked at a heat map, you'd come in and you'd say, oh, that was a pretty easy session. Healthcare went up, it looked okay. Apple wasn't down very much. Tesla took a tumble. It looks okay. Well, that was certainly not the story. Let's have a look at it right now. They sold it, and they sold it hard. Small rally, taking it to the daily high, and then every market fell off. The Nasdaq swinging over 4% for the session, down to 3%. And then at the last hour of power, when Wall Street likes to come in and do their shenanigans, look what they did. No surprise on options expiration. I'll say this, third week every month, or the quad witching, if you're not sure what that is, look up one of our previous videos, or of course search it online. Usually these shenanigans occur. Lots of manipulation heading into options expiration. And this occurred throughout sectors. It occurred throughout the entire market. You'll notice everything started rallying back up near that close. And this is where the sneakiness happens, because we made a new low in the markets. We created, of course, a lot of fear. That fear was then reversed. And it could mean that markets are going to actually now lead into a bit of a bull run here to actually start to suck people back into believing that there are no economic woes on the horizon. We'll speak about that and how that technically looks when we think about the market's footprints that it's leaving behind. But let's also talk about the PCC, put call ratio. Lots of puts entered into the market often can mean that there is a lot of fear. We know that's of course the way it has been, and you'll notice they've been stacking now for the last 2 weeks. And where have we been? On a technical support on the SP 500. So the fear was high, lots and lots of puts, but then they start to reverse right in the back of that session. US 10 years also coming down. This is something we've been discussing now for 2 to 3 weeks. And we've been talking about the treasury trade being the most likely occurrence. You're starting to see the economy getting hit. And this is not just because of inflation, but that inflation is driving through into everything. And that means that people's purchasing power, people feeling rich, all of these types of things declines, and we see markets start to fall over. This will drive the 10-year down, and the safer bet becomes something like TLT, which is of course treasuries. Where are we? We're right back down on those 2018 lows. Very, very indicative of things like, as we know, the US 10-year. So they're pretty much correlated together. If you take the first move and you move that out to where it was on the highs here, because that was a max pain level, then we actually get very similar length, and you'll notice very similar length. So that's why we've been relatively bullish on treasuries. And I think a lot of people didn't understand some of these things, but they're starting to see it. And it's interesting to see our Discord chat. If you're not in it, go and get in the public Discord at least, starting to think about these concepts and starting to understand there's more than one market, more than one sector, and there is a lot of interesting things in the market. There's always an opportunity. Yeah, they always say there's plenty of fish in the sea. Well, maybe not so much anymore, but there certainly is, of course, a lot of opportunity out there. Let's look at the DXY here. And the US dollar continues to decline. Could this mean that it's losing safe haven status? No, I don't think so. I think what's probably going on here is there's a little bit of movement from the street into some of the risk on assets. Specifically, what they're doing is it seems like they're moving into bonds a little bit more heavily thanks to the US 10-year. Remember, stock markets, what are they run by? A lot of the time investors and big hedge funds and big 401ks, etc. They must be invested all the time, so they can hold some cash for a little while, but eventually they have to get back into either bonds or, of course, stocks. And in this case, I think a lot of them have moved into bonds, seeing something similar to what we've discussed, which is maybe a little bit of an oversold market. DXY coming down at this point. The big key level to watch for the week ahead is 102.50. A breach underneath that will take out what we call daily demand. And we've already pressured underneath the 20 moving average. That is the red line here. So underneath here, what we could see is this, a bit of a rally, and then of course a decline in the dollar. And that could also stem the rally that we're suspecting may be here in the S&P 500 and Nasdaq moving forward. Let's also talk about gold, what's going on there. Gold, another one that we've changed our opinion on since it hit demand, looked very, very strong. Continues to look pretty strong, caused a little bit of max pain going back underneath this demand, this little support level here on the Friday session. And if it breaches through, we've talked about 1853, but really there are big zones up here in the 1891 zone that I could see the market going towards. So gold does look a little bit more bullish on the charts. It tends to do well when the US 10 years coming down as well. And it's looking towards that currency safe haven status as well that some people look at it for. So yep, gold starting to shape up quite a lot nicer here on the small time frames. And you'll notice the daily, how it's interacted with this demand area. Strong buying coming back into gold. So a little bit of a rally possibly due there. What's not looking so good is potentially the demand on things like natural gas and oil. I've been a little bit bearish on both of these since the wild swings over here. These type of wild swings tend to be the end of potentially those nice runs. And if you're in these types of markets, you know they're volatile, and therefore the investors might also be dumping out of it a little bit. Natural gas in a holding distribution pattern. If it breaches back under 8, I could see gas really start to fall back down. And that's similar for oil as well. Oil struggling. It's got that 116 resistance here that's been resistance once, twice, and 3 times. Distributed there, sold straight off. And of course, if oil gets under 105 this week, expect it to struggle all the way back down, I think under $100 per barrel at this stage. Just demand waning there. Now, it's not all good for things like Tesla either. Tesla really struggling. We've put a few warnings on this stock recently, and the reason why is, again, this euphoria movement, followed by dumps, followed by euphoria, followed by huge dumps, followed by euphoria. And these euphoric kind of movements are usually signs in the market of significant traps. Now, a lot of you will look at valuations and you'll say, how has Tesla held up so well? Well, I think it's a mixture of things, and I'm not here to get into the fundamentals too much, but you can see that the actual stock is struggling a little bit right now. It's not holding the same kind of buying pressure that it did once before. 700 boom, 700 short, bounced, but then it made a series of lower peaks, and we've talked about that a little bit here on the channel over the last couple of weeks. We saw it struggling to rally. And I think for Tesla bulls really need to see it rally through these last highs. So we need to see some strength. Even the Friday rally was not that good. Could Tesla fall all the way to 550 before we actually see a turnaround? It's certainly possible, even if the market's turning around, that Tesla could do that. It's in really kind of no-go land at this stage, and I think most bulls will be looking for it above 700 and then want to see it break through like that 735 area so that they can say, okay, well, I notice that this market has made a maximum pain level. I know potentially what that is, and then I can start looking more for the bull side. Down here, I think it's mostly investors having their longer term concepts on it. Certainly in a very tough zone here. I could see why it stopped here, but at the same time, it's a tough zone, and I think most people will agree with that on the channel here. What do you guys think of Tesla? Let me know in the comments section down below. Let's move over to Apple. What's going on there? Well, Apple bounced pretty heavily through the session. You can really see the wild swings here in Apple. Dumped off, then rallied straight back up. Not finishing green, but certainly finishing a little bit better than it could have. Let's take a look at the weekly. Weekly, not exactly in our box. Not great for Apple. I would again say it's not the best looking technical in the world here. For Apple buyers, they probably want to see a bit of follow through, but I think the follow through action could be interesting. So see how you've got those kind of highs on the day? That level sitting around really about that 142. I think that'll be a big day trade zone for buyers in the next week if it can get back up there. I could see some rallies moving back into that 147 kind of space, maybe even fairly quickly. Let's go over now to SPY versus QQQ. So we know that it's not the time necessarily for everyone to love on tech stocks. Inflation concerns, growth concerns, all of these things hitting the economy. What's going to be hit first? Well, of course, it's PS ratio style stocks. The hypers, they've already been really smashed. The next thing to be attacked is usually the larger growth stocks, and that's what we've been seeing now for the last couple of months here. If you look at SPY, that is SP500 versus the QQQ, it's actually been underperforming for a very long time. And last time we saw a relative underperformance like this, of course, we were in that boom that turned into a massive bust. But during high inflation times, you can kind of see what happened from that 2003 to 2007. The SPY and QQQ actually gave each other relatively equal performance throughout that time. So we've shifted here a little while ago. We brought this chart up. I do think it's worthwhile thinking about ratios in the market to a degree. Let's look at DAX. DAX actually held very well through the Friday session. The big market pickup here that we saw through the demand actually led on. DAX has been easier to trade in some ways than the SPY here. And it's had another doji candle. If we breach through the 14,250 this week, I think that the rally is on across most markets. And at that point, you can see why. Boom, boom, boom. That's a lightning bolt, the trough, the peak, the higher trough, and of course, the rally through busting that area off. And then we see some nice rallies here, you would think, in something like the DAX. Let's now bring it over to the US markets. What's occurring in those? Well, the Russell 2000 has held up again. It's filled the gap. So all that gapping on the left-hand side is now filled through that session. It's pulled back up and it's still holding that 170 quite easy. It didn't even get back down there, while, of course, the SPY and Nasdaq were making new lows. The Russell 2000 was holding up, and it shows us there's rotational strength here in some of these beaten down stocks. I'm still kind of positive here on the IWM. It just seems to be looking like it wants to give that little bit of a turn. And that doesn't mean a huge rally is coming here, guys, but this is what occurs around that period of time when you usually start to see the turn. So think about last time what happened. January, the low was met. Of course, the Russell bottoms. The Russell rallied. The Russell bottomed again with the SPY actually made a new low. And then we rallied back. And that was all we got in terms of the small caps. Then we fell back over. Is it the right time for that to occur? Well, I've argued a little bit here that we're on that distance, and that distance from, of course, not the false break, but this break here was very similar. So therefore, should we go back up? Notice it's all moving in those waves. A lot of people will call this kind of Elliott wave theory or anything like that. I like to use it when it makes some sense, and it's occurring through these markets right now. Nasdaq, SP500, TLT, we're seeing it across the board. Speaking of Nasdaq, we reached maximum pain there. We basically got down to 11,500, tapped that level, and instantly bought off. And Nasdaq's not the interesting one. It's actually the SPY that's most interesting right now. So here's the session. Here's what happened. You can see that monster sell-off. And just to look at the 5-minute chart here, look at that turnaround. On the 1 minute and 5 minute, it basically made a series of higher lows, breached that area, and just rallied as hard as it could to get those options expirations on the SPY right to where they wanted them. And we'll see that soon. For the week ahead, I think this area becomes a huge point, this 12,000 kind of 50, 60 area. You've seen resistance here. This is where the sell-off all began. So I think bull market rally experts will be looking at this breaching. And once that breaches, pullback zones to then take further longs. That seems quite likely. For bears, they'll be just looking for a new low. Any new low past this point seems unlikely that it will come back easily from that, because that will mean that the max pain wasn't really successful and the market's true intentions are really to go lower. So of course there's a bull and a bear case always. I just think it might be overdue to have a little bit of a bull market, and a lot of it's got to do, well, when I say bull market, bull rally, it's got to do with being outside of certain things such as the Bollinger. So you'll notice the Bollinger here, and I don't always bring it up, it shows extreme levels. So that is it when extreme fear is in the market. Now we actually got an extreme fear level in the previous week. That's 1, 2, 3, 4, 5, 6 weeks down. Already statistically unlikely. We talked about it a lot. This time we get another low that was formed followed by a rally, but we're still well outside of the Bollinger. So it kind of looks similar to over here, yeah? And what happened after that? We ended up getting a little bit of a rally. So this is a point where people are very fearful. Understandably, it's super fearful out there. Of course, it's very tough to think about markets, logically sometimes. But are we due to that mean reversion? Remember, the markets love a good bit of mean reversion. Coming back to that 20 moving average, super far away from it on the weekly. It's certainly starting to look that way. Let's take the distances as well. Let's talk about those distances. If we move from here to here, and we think about from here, not with the false break rally, so around that level there, all the way down, we hit it in the previous week, and then we took it out in terms of those lows and then rallied it back through. Let's have a look at the rally. How did that look? Again, boom. Big wick here. Huge amounts of buying occurring to try to get it back to that 3,900, 390 on the SPY. And if we get a rally through, guess where level? This is why I use the SPY. This zone here, this 3950 area, just talking about in the private community that we've got in Discord. If you're interested in getting a free 7-day trial, you can of course do that. This area here becomes a big level for day traders for the week ahead. If rallies occur off this, you would think the buyers are going to come back in and show commitment. If we obviously bust off this just before 4,100 high, then where's the next level going to? Well, if you think about any of these types of theories, let's say we bring Elliott wave into it. You've got your 1, you've got your 2, you've got your 3, 4, 5. Now, some people would say, well, that's a new low. So, has it started something new? But I'm going to go with that for this standpoint. Now, this is where we get that turnaround story. So if we get a turnaround story, will it be similar to this, where we get that ABC kind of turnaround story? Certainly could be there. And distances, because remember, we've already measured that distance on the way down being very, very similar. Well, that would mean that rallies should be relatively similar as well. So if we took a rally from here to here, we'll use that as the rally point. So 1 second, just grab that. There we go. And we think about where that would put us. Notice how it goes back to around that just on 4,300. Would that make sense? Where is our mean reversion going to be at the same time? Well, that's going to make a lot of sense, because by the time it gets up to this point, that's where mean reversion would be at. So I can see the bull case here, and I can see the bull case for the nastiness that occurred throughout the session as well. Because if we look at the options expiration, you'll notice for this week, we've got a lot of puts still sitting all around those 360s, 370s, 375s, and 390s, 380s. So max pain is technically at 405 right now, a little bit higher than the market, but I think it all comes back to this point here. I wrote here, 390 remains a huge level coming into this Friday stock market options expiration on Twitter. And the reason I did that is because when you bring this up in a chart, look what happened. We had a lot of 400s. There were a lot of 400s. They started closing those. So remember, this is open interest. So those open interest strikes were all closed off. And then they really hit all of these people trying to make money from puts. Everyone was down. And I bet you this ballooned through the day where people were continuously loading puts throughout the session, etc., etc. We can see already how many options expired worthless, and they defended the zone. So when we talk about defended areas, you can see the manipulation into these key events. And unfortunately, it is what tends to occur. If you're interested, follow us over at FX Evolution on Twitter. Let's move into Bitcoin. Let's talk about Bitcoin levels. Still in consolidation. Nothing much to really report here. Mostly down to the stock market, we would think at this stage. If the Nasdaq can start to rally, expect Bitcoin to have a bit of a rip rally as well. It's found a level of support. That level is sitting around 28,700. I'll move this box down just so you can see that. If we zoom it out a little bit here. And the other thing is 32,000 remains the big key level. So basically we've got down here around this 28.6. We've got that resistance that looks like it's there, 31, but there's a lot of supply sitting around 32, and that's where that 20 moving average is. So I'd be pretty careful here on Bitcoin. It's consolidating for now, but that can also be a coil ready for a next move down. And we've got some pretty significant levels around that 23,500 and that level just underneath 20K. So you've got to be careful here in Bitcoin. Consolidating for now, maximum pain may have already been achieved over here, and this is the tendency that markets like to do with Bitcoin. If you think about the bottoms in Bitcoin, it likes to come up, likes to come down, consolidate, and then go on its next move. So 32 and everything else seems pretty normal. Ethereum, very, very similar. If you look at Ethereum on the chart, another consolidation, and this one has a big level at 24.5, basically 2,455. And then, of course, we've got a resistance, 2162. That breaches most significant level after that's 2450. Good luck out there in these markets. For the week ahead, in terms of what's going on economically, quite a lot of little bits of news coming out from different countries around the world. We've got Papa Powell on Tuesday coming out. Fed Chair Powell will speak. That's going to be a lot of fun, isn't it? I'm sure we're sick of him. And then FOMC meeting minutes, that's going to be a big one. Wednesday, 25th at 2 p.m. New York time. And then we keep scrolling through. We've got prelim GDP as well. And we've got core PCE price index coming on Friday. So it's a bit of an action-packed week. The Fed's coming back out to tell us what they think is going on. And that's never fun because the Fed seems to just say whatever the hell they feel like. They've changed it, as you saw by the meme at the start. You know, they could say anything, and can we really take it as truth? Not really. They're trying to keep the markets guessing. That's keeping the markets low. And on top of that, it's really feeding their hand, which is to try to combat inflation with as little rate hikes as possible. Thanks so much for watching. Please subscribe if you enjoy the content, and we'll see you in the next one. And remember, join the Discord community, links down below, and follow us on Twitter at FX Evolution. Bye for now.